Hey, what's up? All right, I wanted to do a video for you today, and I thought this was important. I was talking to somebody about this earlier today, and it was about priorities. If you have no priorities, you can just float around on the planet anywhere, especially when it comes to investing in real estate. So I wanted to go over a couple of things with you guys. You guys may have heard me talk about this already, but I wanted to share this with you today. I thought it was super important to just bear this in mind. So when I think about investment priorities always change. Who I was when I was 20, now that I'm 49, that's changed. What's important to me as it relates to investing my money in real estate, being a real estate investor. On the way up, some people are going to be like, hey, take more risk. Where I am in my life and I'm starting to be responsible for more people's capital, my own capital, my family's future, as well as other people's family's future, priorities always shift, even though I'm always growing. So with inflation, the looming recession, all these different conversations about rates and stuff, I wanted to share Bell Capital's priorities as it relates to investing with you so you can adapt them in your own if you want to. All right, so number one thing that is a priority for us that has not changed is capital preservation. Don't lose money. If you're going to invest your capital, your money, your cash, or hard-earned bucks into a real estate deal, whether you're doing it by yourself, you're doing it with another person, you're investing in a fund, you're investing with us, another syndicator, whatever it is that you're doing, the number one thought you should have about investing is don't lose money. Preserve capital. This is not the time to lose your money in a deal that's racy. It doesn't make sense. So as an investment priority for Bell Capital, that's our number one thought. Are we going to lose money in this deal? Will we lose money in this deal? Is there a way we can possibly lose money in this deal? There's always a way to lose money, but you don't have to. You just like going to Vegas. You don't have to gamble if you go to Vegas. You can just watch the shows. That's not gambling. So you're not losing money that way. That's how I look at it when we're talking about investing in a deal. All right. Number two, invest in cash flow. Look at the deal. Does the deal cash flow? Look, things change. The NOI, which is the net operating income on a multifamily property now, the NOI may not have changed at all, but the interest rate on the debt has changed. So that could make a deal not cash flow pretty quickly. So you're going to have to adjust your underwriting. I know we did. We scaled back a lot of stuff. We changed how we underwrite. We changed the location when we look at a deal. And now, that's the physical underwriting. And we drive by, we underwrite that deal. And then we look at the financial underwriting. Does it still pencil? Can it cash flow? Can it support, if we put a down payment down on a deal, can it support what we're looking at? And if not, we may have to hold off. Even if we've changed our underwriting a little bit, does it cash flow? Will it cash flow? And will it continue to cash flow for us? That's number two. Number three, the ability to force appreciation. The game has not changed for us. We're still in the housing business as it relates to an investment priority. So will rents continue to rise? Can we still raise rents? Can we increase the rents? And naturally increasing the rents increases the NOI. Increase the NOI, you increase the value of the property, period. So that's always the thought. Can we force appreciation? Will we ever have appreciation? Those are investment priorities for me, big time, as I'm looking at a deal. All right. The next one is tax benefits. Are we still going to be able to take advantage of the tax benefits associated with some of the deals that we look at as an investment priority for us? Are there benefits to making this investment tax-wise? Look, we're not avoiding taxes. We're deferring taxes, or we're holding off on paying taxes, or we're writing off what the law says that we can based on our acquisition of these specific assets. Like, does this asset afford me an opportunity continues to still take advantage of tax benefits? Like, the depreciation stuff for 100%. This is the last month of 2022 that's going away. Next year, I think it's going to be at 80%. You got to know that, but that's still a huge tax benefit depending on how much capital or how much money you make to be able to offset your income to be able to write off certain things, but that's a different video. So the other thing is, does this have scale? In other words, is it big enough? It's a priority. Look, everyone talks about diversifying your investments, but the larger apartment buildings is a diversification. What would you rather have? One person paying you rent, one house paying you rent every month? Or would you rather have 100 people paying you rent on one location every month? That is scale, going bigger, to be able to scale out our operations, to go big enough so whereas we're not at risk. This is an investment priority. Like we said, number one, don't lose your money. Number two, cash flow. Number three, can we force appreciation by raising the income? Number four, can we get the tax benefits of doing this by buying a big enough property to offset other incomes from other places, whatever that is for our investors? And then scale, is it big enough? Can we pay professional managers If we lose a tenant, will it matter? If we lose 10 tenants, will it matter? Can we still cover our debt? Can we still cover our expenses? Can we still cover our payments to our investors? All that stuff matters when you're thinking through what is a priority for you to make this decision, right? These are super important when you really put your own investment priorities in play. Are they hitting these things? Are you investing with somebody that has priorities? Like for us, we know, like, hey, if the location is not going to support what we're doing, we're probably not going to do it. We can possibly lose money at this location. It's not cash flowing. That's a problem. The tax benefits are kind of, they're going to be there because it's real estate. But is it a risk we want to take? Is it big enough? Right? I mean, are the write-off opportunities going to be large enough to offset other incomes based on our investors' needs or what it is that they're looking for? And is there scale? Is it big enough for us to even look at this thing? Which is, it all kind of locks in together when you look at what the priorities are, what our priorities are. So think about that yourself. I wanted to share that with you guys on a Friday, right? Because it's important. Because it doesn't matter whether it's what you're looking at. Make sure that if it's not our priorities, if it's not your priorities, come up with some priorities that make a difference in what you're investing in. Because let's face it, when you invest your hard-earned dollars and you're putting them to work for you, the goal here is to not lose money. With everything going on, potential recession, rates are rising, inflation, like this is the time to be smart, investing your money. Everybody else says, keep liquidity, keep this. The person telling you that has no liquidity. They probably dumped all of their money into an asset that's producing cash flow for them. So their liquidity is different from probably yours. If you got 50, 100,000, $1 million coming in a month off of positive cash flow, it's different from somebody else who's looking to get into investing their hard-earned money sitting in an account not doing anything. You got to put it into an asset that's going to continue to generate income for you and your family. That's important. And that is why I wanted to share these investment priorities with you, because this is how I think through stuff. All right, so I hope that helped you guys. Have a great day today. I wanted to make sure to put this video out. I appreciate you. Make sure you do your thing. Look, if you have any questions, go to bell-capital.com. There's 2 ways to get involved with us. You can go there, hit the button that says get started, register on our investor portal. You can see what we have working on. You can look at the fund documents, what's going on. Got to be accredited to invest. If not, you can definitely take a look at what we're doing. You just have to, save it up or whatever. I got something for you guys maybe later. And then second, you can schedule a call, which will get you on my calendar. Myself or somebody on my team will reach out to you, answer any questions that you may have, and hopefully get you started with your investment. Look, this is the time to get started if you're considering it at all. We're going to be on a tear all year. It's super important. We're going to be closing down Fund 1, and then we're going to be moving on to Fund 2. That is our goal. I have a company goal for that. And we're going to really step into the market to buy some really, really great assets, because I think a lot of great opportunities are coming, and I definitely want you to be a part of our Bell Capital investor family. All right, so let's get this thing done, guys. Have a great weekend. Let me know if I can help you with anything. I'll always be here for you. Have a great weekend.